What's going on, guys? Another Sunday scan. Just got back from Vegas this morning. I did the overnight. My goal was to potentially fall asleep, but it didn't quite work that way. So, unfortunately, I had a nice all-nighter. Ended up sleeping in a little bit this morning, but I was happy to get out of there. Chris Irons is over there in Vegas. He's there for the next week, and he was ready to plan out our week. You know, when we're going to meet up, when we're going to have a drink. And so, fortunately, I got out of there just in time. But at any rate, great conference with the Nigerians. Some really good guys out there. Both Pete and John are just genuinely great guys and super helpful, you know, on and off camera. So they're really good guys and good first event for them. I guess they had done some with Options Monster back in the day, but obviously they sold that many years ago, and so this is their first conference that they put on since then. But as you guys know, they've been coming to Traders for a Cause for quite a few years, and so we'll see John Thursday, Friday, and I think Saturday's going to pop out. His daughter has an event or something like that, so that's going to be good to see him again. For those of you guys that haven't met him, I think you'll be impressed, just because he's a super nice guy and generally interested in what you have to say. You know, it's not just a handshake, hi, pitcher, and see you later. It's a good conversation. So that's going to be awesome. But again, so that's Thursday. Thursday night I'll be flying into Vegas, and then so Friday we've got the cocktail hour. If you're not part of golf, golf's in the morning, cocktail hour. Saturday the conference starts. We go pretty much all day. Then we get another cocktail hour Saturday night, and I think that one's at Beer Park. That'll be fun. It's always across from the fountains, so you know, as you're there drinking a beer, having a drink, whatever, you know, every 15 minutes or so the fountains go off, which is pretty cool to see, you know, from up high across the street. So that'll be a good time, and then obviously we get into the conference and we go to Chayo the next night, and then we carry through Sunday. So Sunday, if you are not going to the conference but you're local, even if you're, you know, California or whatever, and you wanted to drive in, some people are doing that. Sang Lucci and myself, we're putting on, or I'm joining him for another Lucci Meets, and we'll be doing that right at the Encore after the event. So that will be a good time if you are not coming to the event. Even if you are, you can still obviously come, but just an FYI, it is free. So the link's in the scan tonight, and it's worthwhile to check that out. So that is that. Just a couple notes. So when I was out there in Vegas, I did a little talk on basically my A+ setups, you know, 2 of them. And then my 3 kind of favorite setups, the daily drivers, the types of trades that, you know, you kind of see me take every single day, while you're trying to remain, you know, trading well, focused, getting a feel for what the market is until those A+ setups type, until the A+ setups come. And, you know, that might only be once, maybe twice a week, sometimes only 3 to 4 times a month, but the key that I was making, or the key point that I was making, was that, you know, the goal is to exercise or execute those well, those 3 or 4 times per month, and those are what's really going to boost your year. That's what's really going to change you from, you know, just kind of grinding it out to really having, you know, good years back to back to back. And you know, some of the best traders that I know, you know, go back and, you know, go through stats and go through everything that they've done, and, you know, it's kind of backed up by stats where, you know, the big percentage of their money is made on a few trades, right? So the key is to always stay firing on all cylinders and not have those huge drawdowns. Obviously, sometimes, you know, you get cold. Sometimes they happen, but the key is that when those A+ setups come, you don't want to be in a situation where you're, you know, too nervous, you're lacking confidence, you're not able to execute in the way that you should, because then, you know, like I said, those can really change your year. And if you're missing those, then you're just going to have a mediocre year, which is also fine too. But just to be able to take trading to the next level, what I've noticed over the years is that traders execute super well. You know, less than a handful of times per month. on a big trade. So, and then I kind of went into the whole psychological side of things. One other technical note was looking left to plan right. Michelle's always said that, and that came from Sunrise Trader on Twitter. That's something that he kind of had tweeted one time, and she loved it. She's repeated it, so I think that's a great starting point for a lot of trades. You know, always look left on the daily, intraday, whatever it may be, pre-market, to kind of plan what you're expecting on the right side, as in, you know, what's to come. But then into the psychological part of things, you know, patience in your entry of the trade and your career, and then also having consistency in life, your day, and in, you know, how it trickles down to trading. So basically in your life, that comes down to relationships, things on you know, on your mind at open, 9:29 a.m. you get a phone call, it throws you off, things like that, to your day. One thing that I remember Tim Boeing saying, one of the traders for a cause, is nothing good happens after 9 p.m. Which, you know, for if I was to convert his 9 p.m., that's 10 p.m. for me. So for me, nothing good happens after 10 p.m. So, you know, get to bed, get up early, start your day, and all these things, the more consistent you are, you know, if you throw working out in there every single day, or you know, at least a couple times a week, it's all going to help trickle down into your trading. So that's kind of the points that I was trying to make, and hopefully it came across well. So let's take a look at scan for tomorrow. Like I've said the last couple days in the room, you know, there's my excitement level off of open is maybe like a 4 or 5 out of 10, whereas, you know, if you go back a month, you know, every single morning there's a 8 or 9 out of 10 excitement level of you know, this is reactive trade. I'm ready for it. You know, I want it to go here. I'm going to react to it. This is going to happen, and, you know, move on. But recently, I mean, it's not like that. Not that there's a shortage of plays. There's plenty, but you just have to be patient to not force the trades in the first 5, 10, 15 minutes, and then actually, you know, focus 9:45, 10 a.m. to really zone in on some of those trades. And you know, that's kind of like I've said before. You don't want blinders on, right? And, you know, if these other tickers are stealing headspace from you, then you might end up missing these layups off the open, or after the open, 9:45 to 10 a.m. So that's really one thing that I've been kind of preaching over and over and over during the pre-market broadcast when we do the microphone at 9 a.m. every morning. And just a reminder, you know, just because there's not a 9 out of 10, you know, A+ type setup coming to the market, getting prepared, and you know, just because we're not excited about something does not mean they're not coming. So you just have to be able to quickly identify that and adapt that. You know, I'm gonna cool it off of open. Let's see how things set up, and then make my moves. And that's worked well. That's worked well the last couple of weeks. But it's just a small change from, you know, what worked well last month or the month before. So if you're interested in traders for a cause, again, like I said, it's the end of this week. So talking with Zach, he said we're going to need a bigger room if we sell too many more, but I think we do have 5 chairs. But like I wrote in Scan, I will give up my chair if we end up selling 6 more tickets. So we're pretty much at capacity. But if you do have any questions, reach out to Zach at traders4acause.org, and you know, he can let you know whatever you need to know for the event and get you signed up. So again, I look forward to meeting everybody out there, and let's get into the scan for tomorrow. So MEET, MEET, nice long opportunity on Friday for me. The goal was either gap up and a little bit of parabolic, and then look for the short and unwind, or if it just kind of opened mediocre sideways and the dip started to get bought, then I'd be interested in getting long. And that's exactly what happened. So I got involved around the 4s, low 4s. I think it was like 405, 406, something like that. Basically risking towards the lower days, 390s, 395s, and as it went, basically risking to even. So I put a stop in and I left because I was kind of in and out during the day. And again, I'm mobile, and I'm traveling. So, my size is way down because, I want this setup when I'm trading, more size and more aggressively. I don't want to be on a laptop where I'm, half comfortable and being aggressive. So anyway, I let the trade work through most of the day. It wasn't really sized up very much, but nice opportunities. There are a couple newsletters that are in there, so that's always good to be aware of because come Monday, if it gaps up, they might be inclined to sell, which could provide an opportunity on an unnatural flush because newsletters sold. So I always try to keep those things in the back of my mind. But for now, I would assume as long as 420 starts to base, this can continue to go on. I'm not too excited for a short. If it does set up for a short, I'd want it 450 plus. And then I would probably treat it almost like MCF this week, where it was just a slow, steady unwind, where it came down one day and then started to go back up. The next day came down, got saved. Next day came down, slow and steadily. And so I think that's what we're going to see with MEET, where everybody gets excited about the potential of a short, but I think it's going to disappoint as far as how far it can come down. So we'll see, but I'm open to both trades. 420 base for higher, otherwise higher the better. Gap up parabolic for backside fade. But again, if I do nail that trade and it does unwind, I'm not looking to be patient all day. I'm looking to take the trade and move on, just because I don't think it's going to be one of those complete full day unwinders. TSG. This one's been a nice ripper since the deal. I think it's a Canadian company, if I remember correctly, but they are OTC listed, but it's totally illiquid. I think the day they did the deal, it traded like 10,000 shares or something. So it's not really a good one to kind of watch to gauge. If this goes up a lot, this one's going to stay strong. So on a situation like this, you've got some resistance, 2170s. So we're starting to get up there into the high the other day was 21. So we might get back up there and retest that level, and it was 2173 was the high back here on May 9th. So that's a number that interests me, but I'm just going to let it do its thing. And then the day that it's heavy, 9:45, 10 a.m., I'll look to be fading that trend. I don't think I'm going to look for a long here, but that might be a mistake. It might just keep on, going every single day. But for my own comfort level, I'm going to be looking for the day that it starts to kind of take a break, chill out, unwind, and I want to just join that trend. So big range, big volume the last couple days, and monitoring it for that trade. Overstock. Our good old friend Overstock's been very nice to us. The last, I think, 3 or 4 days, there's been a newsletter coming in. So, some unnatural moves, but they've been doing well on it, right? They alert it and, ends up kind of sneaking up throughout the day. And the last couple times they also sold it was also the peak, right? So they had sold it into the pop. And I think over here into the close, they had bought it and then they sold it before the close, and it also pulled back. So we got some great opportunities on this thing, but I just want to keep it on radar. So I'll be putting some parameters out there. If it's over 1050, 11, alert me. If it's under 10, if it's under 9, 90, whatever. I just don't want to lose it off radar, because when this does unwind and once everybody realizes that 10 is not going to hold, and then it starts to get heavy there, and 980s and 9, so on and so forth, we're going to get that nice unwind, and I want to be part of that. I want to be part of the day that it goes down, 50, 60, 80, $1.20, whatever, again. So for those of you guys that have been listening to Sunday Scan, you know that this one's been a really nice profit center since those 29s short, and also over the 15s, thinking that it wasn't going to be able to hold that, and thinking that it was going to really unwind. So we'll see what happens here. I think I kind of would compare this 10 with the 15 level. So if you were to kind of look at where this 15 level was basing 1 time, 2 times, 3 times, and everybody kind of like started to put faith in the fact that it was going to base there, and then they just had that day. I think it was I think the CFO left or whatever it was, and some other news. It just got crunched. So I think that we're just going to be kind of hanging around 9 for a little while, and then we're going to get that nice crunch. And so higher the better for now. I would absolutely love it. You can see the volume starting to taper off. So that's when you get in trouble if you have too much of a bias, right? If you get too aggressively short, and then it just kind of trickles up on a little bit of volume, you get nervous because lack of liquidity, and then you end up getting squeezed out, right? And it goes right back to where you thought, but it's just because it was thin tape. So it's just important to make sure that you kind of always reevaluate your risk and don't do something just because you have fear of missing that breakdown. Be patient, let the trade come to you. PTON. So I thought this was going to hold a lot better. So my thought process last time we talked about this, I think it was last Sunday scan, I really thought that we might actually have a nice rep. I really thought that it was going to hold. I got it completely wrong. My goal was basically to take that trade if 25 started to really firm up, right? And they didn't, so obviously, kicked that trade to the curb. Ended up unwinding. I missed that unwind day, the big red candle, for the most part. I think I traded a little bit off of a long, but didn't partake in the short at all. The last couple days, though, I've been buying the dips after they set up. And I think the 2 days in a row, you could see I tweeted when I got involved. But I wait for it to set up over VWAP. I wait for it to, the second day I did. The first day I waited for it to basically put in higher lows. And then once you start to see competition on the bid side, so when it ramps up, pulls back, and then, it kind of dribbles up, and then goes up a little bit more, comes back, and it bases higher, and bases higher, and bases higher. Everybody's starting to compete, right? Everybody's starting to compete to get some on the bid. That's what I want to see. That's what I want to join. And at that point, you risk towards the prior low. And that's what I did the last 2 days. And it was just a really nice, probably 10, 15 cent risk for that dollar reward that we got both of the times that I had mentioned the trade thesis. So, SES. This one is nothing that I'm, crazy excited about, but I take notes like I talk about. You take notes in your head on particular stocks, right? Why did they put the SSR on at the very last minute into the close, right? They want SSR on for Monday. And, why do they want that? Are they going to put out a PR? Are they just setting people up? What is the game plan here? There was a lot of volume. They swiped it up this day into a circuit halt. Might have been a little bit of buy-ins because the prior day or two right over here, this was a newsletter. Newsletter alerted it long. They sent it into a halt. They added, and then when they sold, obviously you can see what happened. But point is, total trash name. Nothing that I'm super interested in, but I'm just taking notes at what I see because shorts have been super aggressive, like oddly aggressive on the offer, and you can see that because the SSR is on, right? So you can see when they get super aggressive, when they're trying to fill, they chase the bids down, etc. And then I've been seeing them, just swipe the offer quite a few times. But as you can see, each day into the close, they just literally let the bid fall. So to me, it's interesting that they put the SSR on into the close. It doesn't mean anything, but again, it keeps it on my radar because this is a very low million in change float, maybe 1.3 if I remember correctly. So again, if I was going to be interested, I want to see 2, 3, 4, 5 million shares traded. But then I wouldn't forget what I saw these last couple of days. So that's the only reason I'm keeping it on radar. But for now, just assume that it goes to 1, and that'll keep you safe. So this SDC was fantastic. It was a great trade off the open, but then it just started to really squeeze back. So, and that comes down to, did you take the trade? Did you ignore the trend? And I think that, there was a great opportunity where it ramped up and, not that it was on radar prior to that, but, later on in the day or later on in the morning, right after the open, there was a research report put out. And so just seeing this nice little ramp up was, an interesting thing to see because you're actually shorting towards the highs of the day versus sometimes you see things, already at the lows. So that to me was interesting. I got involved in it, and it had a really, really nice unwind, about $1 per share. And unfortunately, I was ready at 1281 or 1282, 83, somewhere like that to cover a half size of it, and it went to 1291. Is the rest of that story. So I missed the covers on that. So it ended up coming back, and I covered. I minimized what the trade could have been. I started to get re-short again, and obviously I had to respect the trend. I thought it was going to remain a little bit more heavy than it did. But with that said, we have a trade coming this week on this. I think that, it's just like a lot of the other hit piece type newsletters. Sometimes, they might be fantastic 90% of the time, but the time that everybody gets, I'm going to short this, I'm going to hold it all, I'm going to wait for it to unwind, I'm going to go more size this time, they're always right, that kind of attitude, and avoiding, what the trend's saying, where it comes up, it starts to consolidate at VWAP, it confirms over VWAP, nice little ABCD type move. Ignoring all of that and then getting in trouble is probably what happened with a lot of traders. So with that said, I think that a lot of Friday was just a steady squeeze out. And ideally, I think 1470s range is where it closed. Ideally, we get like that 15-20 push and then start to look forward to unravel. But pretty nice opportunity, recent IPO. It's still super, super, super highly valued. This idea, this trade thesis, and they're probably going to be right in a couple weeks. But just the timing and the aggressiveness of shorts, there was just too much supply of shorts, and there was enough demand to offset that. And I think it was just really just a supply and demand thing, and shorts got ran over. So with that said, don't take it off radar the next couple days. I think we're going to have a little bit of a backside move. And that is easy to wait for. I'd rather be, 10, 20, 30 cents late than $1, $2 early, right? So I don't mind waiting for it to kind of proof and then fail at VWAP a few times, fail at VWAP a few times, and then start to scale in from there. SRPT, not a normal one that I would trade typically, but I like this bounce action off the lows. The sector was getting beat up huge. Sector rebounded. We might have an opportunity here. This reminds me of the day that I was thinking that oil was going to rebound, which was on Thursday. I was thinking it was going to wash out and then come back. So my trade thesis or trade idea for that trade was DRIP, G-R-I-P. So what I wanted to see was a gap up and then an unwind. And so basically that's what I'd want to see for a candle on SRPT. So just to show you again this DRIP, you've got a nice little rally, and in this case 2 days it starts to speed up. I want to see it a morning ramp, maybe $1, $2 up, maybe start in a little bit, look for it to fail, confirm my thesis, add a little bit, look for it to fail again, add a little bit, and look for the snap. If the snap doesn't come, size down, otherwise respect stops. But that is the kind of the same idea of what I'd be looking for, and it's also coming into a little bit of resistance here at the 91s. Again, that's going back to what I said to start this, looking left to kind of plan right. So looking left, you can see it's going to run into some 91 resistance. That does not mean that it has to stop there. It just means take notes. Be aware of that. LABD, this one, obviously you guys should know what this is. And it's an ETF, so it's opposite LABU. So if bio is starting to squeeze up, if the market looks great, then I would be leaning on this thing, and we potentially can get a nice little melt like you saw on VIX. But I'm not trying to make a market call right now. Market obviously straight up on Friday. So are we up another 200-300 points by morning? Are we down 200 points on a tweet? We don't know yet. So I had a great trade on this LABD on Thursday, shorting that. We basically, I think it was 2680s down to under 26s, which is great, and the high liquidity. So sizing is never really an issue on that. So I'm keeping that on watch. Last couple, ZY, XI. This is the start of a potential A+ setup, right? Higher the better. We did have one day of intense pullback and rebound. So, take that into consideration. But now we've got these wicks forming. So every morning that's weak that holds, I'm actually interested in the long because that's what this chart is suggesting so far. And it's got a history of nice moves like this. And I don't want to step in front of it. However, if we start to speed up, if we start to gap up, and we start to parabolic, then I'm interested. And I would absolutely trade that. As you guys might remember, I traded this move over here, and it ended up being a really nice opportunity. Of course, I didn't capitalize on this pullback day, but this day was really nice. So with that said, higher the better. Not looking to get in front of it. But it's mainly a watch right now. I don't have a bias going in tomorrow. It would kind of be like meat, the first one of the day that we talked about, MEET, where let's see if it consolidates a little bit red and looks for the push red to green. Let's see if it consolidates even and grinds up. Otherwise, no interest in the short unless it's below VWAP by 9:45, 10 a.m. and it's failed a few times, or we start to go into parabolic mode later in the week. Real, keep it on watch. My thought is whatever move it does out of the open, it's going to reverse. So if it has a weak open, I think it'll come back to flat. If it ramps up, I think it'll come back to flat. Not a excitable trade for me, but it's been offering fantastic trades. So I just want to keep that on radar. HPQ, and these are just kind of fast ones. I'm not crazy excited, but I like the daily charts. I think we're going to have a trade this week on them, so I want to have it at least in my head. So when and if I do see it on scan, I can react that much faster. But HPQ, nice unwind on Friday. I totally missed it, given that I was in and out on my desk. But nice unwind, VWAP seller. So basically, what I usually do, I want to look left, like I said. And so I'd be looking maybe 1670s up to, I don't think I'd probably hope for 17, but any push that's over this 1670, 1680 level, I would think would start to get met with some sell pressure. So I'd be looking to lean into any fast push that goes through that level. And if it starts to base and go higher, then forget it. HRTX. This one had 1750 pricing. That does not mean it has to base at 1750. That doesn't mean it has to stay at 1750. It could continue to go based on the bios and whatever the overall market's doing. But I want to keep an eye on it because obviously they did just price at 1750. There could be some more overhang where people aren't happy with that and they unwind it, or this was just 21. Maybe people are upset that it was 1750. Maybe it's not going to be a good reaction in the next couple of days. We don't know yet. So I think that there is going to be a trade to join. X, just staying familiar. At some point, if we get a market turn down, we might be going single digits here. HCMP, great range, nice setup, confirmation over VWAP, nice grind. Didn't take the trade, but again, I'm just looking for a potential fail and then potential unwind. If you guys remember ARWR from last week, the ideas in the 26s, 27s for the potential unwind, excuse me, not ARWR, AXSM, in the 26, 27 range. I think it started 28, but anyway, I was looking for 18 to 20. And incredible washout. It went way further than I expected. Had a nice little rebound and whatnot, but you can see they're starting to buy up all the dips and whatnot. So these types of charts, ones that have kind of ran up, AXSM's probably ran up a little bit more, but ones that have ran up a lot and just have never pulled back, it seems like there was a little bit of profit taking in those this past week. And even EXAS, things like that. Some of these ones that have a lot of air in them have been pulling back. So I've been just trying to scan them and keep them on radar. And then that keeps me kind of aware so that when I do see them on scan, again, like I said, That's my reaction rather than, oh, let me go look at the sector. Let me look at the chart. Let me look at this. Let me look at that. I already know what it looks like. And then last but not least, ENLV was crazy. It went to 45 all the way down to 9. So, you know, not that there's a trade there. There's only 200,000 volume on Friday, 600,000 the day before. I actually traded it the day before, but it's a thin spread. I like to keep these on watch because, as I wrote on the scan, MTC was, you know, it kind of reminded me of that, where they kind of create this liquidity and they sell it all the way down. And this particular one went down to like the 250s, 270s, and then they ran it all the way back up to 13 that day. So they trapped shorts and then they squeezed it out. So basically that's exactly why I'm keeping ENLV on watch, not to buy it tomorrow, but hopefully it goes to 5 and then 4 and then people forget about it and then they see it at 7 one day, they think it's a good short and they squeeze everybody out till, you know, 10, 11, 12, something like that. So I want to keep that on radar. I want to set price alerts for that so I don't forget about it. And, you know, similarly with eCore. eCore has been on scan the last couple days, where, you know, it went from 150 all the way to 550, and then it just dumped straight down. Does not mean that it has to bounce, but the day that it does bounce, when it starts to base, I want to be there for it. And that day was Friday, and obviously it had a really nice rally. I think it went to 310 from 2, so you had a 50% move there. So that's why I keep these on watch. Again, nothing I'm excited about for tomorrow, but it's good to remember them so that when it does come on scan, you already know, you know, what to do with it. So that's it for Sunday scan tonight. If you guys have any questions, you know the drill. Comment section below. If you have any questions about the room, same thing. Hope to see a lot of you guys in the room, and have a good rest of the weekend.